President Trump is wasting no time putting his stamp on the Federal Reserve, the most powerful economic institution in the country, and perhaps the most unaccountable. Welcome to the Big Money Show. I'm Jackie DeAngelis. Joining me are my co-hosts Steve Forbes, Jerry Willis, David Asman, and with us for the entire hour, Bullseye American Ingenuity Fund Portfolio Manager extraordinaire. I'll add that. Adam Johnson, Jackie. Great to see you. All right. The president tapping Stephen Miron, chair of his Council of Economic Advisors, to fill a seat on the Fed's Board of Governors. Miron's not your typical Fed insider. He's a fierce critic, even co-authoring a 24-page plan to put the Fed under more presidential oversight. That means no more unelected bankers running the economy without answering to the voters. But that's only the beginning. Inside the West Wing, Christopher Waller is reportedly the favorite to replace Jerome Powell as Fed chair. Waller just authored a dissent against Powell's decision to leave rates unchanged. He's known for moving policy based on forecasting, which seems like a no-brainer to small businesses, private sector employees, basically anyone who isn't in the government.
I think a big part of it was somewhat a lack of logic, because on one side they were saying, okay, we need to weight risk management. Then on the other side, they lowered their economic projections for the year. So traditionally, when economic projections go down, interest rates go down.
So President Trump isn't just talking about reshaping the economy. He's moving to reshape the institution that runs it. And for the first time in years, the Fed might have to answer to someone other than itself. And all this news today, Adam Johnson, moving markets to the upside. We had a little bit of a sell-off on our hands yesterday. So investors seem to like that there is change coming at the Fed.
Well, I think investors want lower rates, and the change that we're talking about would certainly lay the way for lower rates. What's interesting about President Trump is he has a knack for, shall we say, putting his imprint on everything. And the Fed is the latest target of said imprint. And these two candidates are very pro-Trump, I should point out. And they will certainly, I think, take their marching orders. The downside to that is one of the things that I think makes the Fed unique is its independence. And you don't necessarily want the chairman of the Federal Reserve to effectively be yet another member of the cabinet. So there is some debate to be had around that. But the market does like the fact that if, in fact, President Trump's two candidates eventually do come into the Fed, that likely means lower rates.
Okay, I'll give you that it's a little murky. But Steve Forbes, we had some trouble with Jerome Powell in that he acted very political. He called inflation transitory and did nothing about it, and we saw inflation spike to 9%. That was a clear wrong. It was a miss, and he was trying to help Joe Biden out at the time, saying, oh, this is not a big deal. Don't worry about it. Well, we all paid the price for that. Then he cut rates before the election, which seemed a little suspect at the time. And now he's not cutting rates simply because the president is calling on him to, and he uses the tariff excuse as the potential black swan that is going to, spike inflation again.
Well, tariff is a tax. And when Joe Biden was raising taxes, Jerome Powell did not say, oh, this is going to hurt prices. This is going to put a burden on the economy. Now suddenly he's worried about taxes. So, yes, there is a political element there. And I think Jerome Powell also is going to make Donald Trump's life a little more difficult with the Fed by not leaving the Fed when he's replaced next year. He's got one more year as a board governor, and he'll stick around just to stick it to the president. So this is a good move by the president in the sense of, but I think we should not focus on just what the operating procedures. For instance, Steve Miron wants an 8-year term for governors, replaceable by the president, stuff like that. Is what is the model for the Federal Reserve? What is the philosophy by which it operates? And it operates on the theory that prosperity causes inflation. It has a bias against growth. And that has to change. What it should focus on and what it can control is the value of the dollar, the stability of the dollar. Leave the rest to Congress and other things. You focus on the dollar and stick to your knitting.
Right.
And that's what the Fed has not done, and that's why we have the situation today and the uncertainty we have today. Look at the state of the dollar. It's weak. Imagine the dollar being weak against the euro, against the yen, which Japan has a national debt twice ours proportionately. What's going on?
Yeah. And also, David, you can argue we need the growth. The growth will be the engine of this economy. Look, we're not handing out stimulus checks like Joe Biden was, which really was part of the problem. And then all the excessive spending that he did through a number of bills that the country really just didn't need. If people are working, corporations are chugging along and they're being productive and the growth is there, there will be increased spending, but it won't be like that scenario that I just described.
Well, exactly. But I think Steve put his finger on the problem, which is that the central bank's primary role is as a bank. It wants to make sure that the money that is invested in the bank, that is the sweat, blood, and tears of the American taxpayer, is safe. That is, the money you earn today is worth the same tomorrow or even next year, or when you're ready to send your kids to college. The fact that that bank has been stolen so many times by politicians and central bankers that were trying to be polite to politicians by doing the wrong thing needs to be nailed down. The problem is it has two mandates. One is to maintain the stability of the dollar. Another one that was added in the 1970s is to deal with unemployment. That is much more of a political decision than it is a pure economic central bank decision.
But, but a central bank that knows what it's doing, which this one does not, would make the point that a stable currency is the way you get full employment,
Right.
the way you get a prosperous economy, not one that acts like a yo-yo.
There is a little housekeeping to consider, though, whether Myron, I guess is how he pronounces it, Stephen Myron, can be confirmed before the Fed's September 17th decision. That's a question up to Senator Thune and whether he's able to herd these cats in the Senate and make it happen. Because if we go through another meeting of the Federal Reserve without them dealing with this rate insanity that we have going on right now, and Powell continues to do nothing, we're in trouble. The economy's in trouble.
The market's fully expecting to see a 25 basis point cut in September and then subsequent cuts. And I do believe if it doesn't get one or some of those cuts, it will throw a fit. Jerry Willis.
Yeah, I just wanted to tease out some of Myron's suggested changes because he's really sort of radical when it comes to the Federal Reserve. These are suggestions that we've probably not heard a lot about. He wants to cut board member terms to 8 years instead of protecting Fed members from termination after 14 years. He wants to allow all Fed board and some Federal Reserve Bank presidents to vote in federal open market committee meetings. This would really open up the whole process for deciding interest rates to a much bigger group of people, which is fascinating. And I would make the argument that it's more important than ever that we do something about this interest rate situation that we find ourselves in because, and I know Chairman Powell likes to say that the Fed has no influence on the housing market. I think that's incorrect.
Yeah.
But high interest rates have brought the housing market to a standstill. Last month, the existing home sales were down 2.7%, negative 2.7%. We're seeing a market that is at levels it hasn't been at in 30 years. Young people can't buy. Young people are aggrieved. Young people are standing behind Mom Donnie here in New York City. I think there's a political cost of these high interest rates. Something really needs to be done.
And I'll just add to that. I brought this point up with Larry the other day, but we didn't really tease it out. I'm hearing from commercial investors who have commercial real estate. They've got adjustable loans. Interest rates have gone up, that they're kind of running out of time in how long they could weather this storm.
Yeah.
And Trump is a real estate person himself, so I'm sure this is not lost on him and his call to lower rates, Adam. But that could potentially be something, an event, if there was a kind of bubbly situation forming in that commercial market. We've been talking about it, thinking about it ever since COVID, and the threat of it, I don't think, has gone away. It's gotten, increased.
As an owner of Alexandria Real Estate Equities, Inc., which is a very top REIT, and Boston Properties, another top REIT, I would argue the two best in the country, they're trading at 10-year low valuations for this very reason. And they're not able to recycle capital because the money's not available at these higher rates. And it becomes prohibitive. So, yeah, I'm not worried about a bubble on commercial. It's the opposite.
I'm sorry, that was the wrong word.
But there certainly is a bubble, I would argue, on housing. I mean, part of the problem is we are probably in this country short 5 to 8 million homes. We haven't built enough homes to keep up with population growth. And anyone who has one of those amazing 2.5% to 3% mortgages certainly isn't going to refinance now. So there's no supply, and that's driving prices up. So yeah, we need lower rates for the housing market.
Don't you agree, though, that the Trump's idea for cutting capital gains for people who make a lot of money when they sell their house is just the kind of idea that could help get the whole housing market moving in the right direction, because it really goes after those markets where prices have gone up like Topsy, and people are just sitting in these homes where they have huge gains?
Yes. The short answer is yes. I think that would help. At this point, anything would help the housing market.
By the way,
but
can I
lower
just
rates
say
in particular.
one thing that Trump might not like about Myron is he was known as being a hawk. A central bank hawk. He said a year ago, of course, that was before the election, right before the election, when the Fed was going the wrong way, lowering rates at a time when we still had higher inflation. He said the doves are cavalier about inflation and have been the entire time. A little temporary economic weakness is a small price to pay for a permanent reduction in inflation. That's when he was calling to essentially keep rates high. Now he's going to be going in the opposite direction. I'm sure a lot of Democrats are going to throw that line at him from his own record.
Yeah, but he could argue that the snapshot in time was a little bit different than current conditions.
Absolutely.
And
I'm just saying
inflation.
No, I hear you.
And
I totally
inflation
agree.
was higher when he made that comment.
Yeah, of course it was.
Yeah.